Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB on this Friday. I'm Andrew Gagan. Thanks for joining us here at AusBiz as we wrap up the day and the week. What a week it's been. Very positive. In fact, it looks as though we're going to finish up around 3.2% on the week on the S&P ASX 200. Mind you, today we did come off a little. We managed to touch the green for a while there, but look as though we're going to finish down around 0.1%. That is after some negative sentiment, given what we're hearing out of the Middle East at the moment, in particular with the threat that Iran is going to bar the United States and Israeli ships from entering the Strait of Hormuz in a deal that Qatar is brokering. Clearly, the Americans and the Israelis aren't going to accept that, so we're still waiting to hear what the response will be from those two nations. But also, obviously, a focus on earnings, both here and in the United States. We've got some interesting earnings results out locally today, ahead of another big week next week. And also a key event tonight in the US jobs report, the non-farm payrolls. That way may well determine what the Fed does at its next meetings, with the prospects potentially they will have to hike rates towards the end of the year. Well, let's bring in our usual Friday guest. We are joined by Chief Economist at AMP, Dr. Shane Oliver. Shane, welcome to you. Let's begin with what we're seeing on equity markets at the moment. Very buoyant, more records both in the United States and also here. What do you see as driving that at the moment?
I think it's a combination of factors. At its core in the US is very strong earnings numbers, and that, of course, is underpinning the market. The last I saw was that the consensus expectation for earnings growth for the year to the June quarter, that's the quarter just passed, is up around 32%. And we're now more than halfway through. I think we're about 80% of the way through the earnings reporting season. So that's a spectacularly strong result. And that, of course, has led to some sort of easing in those concerns about chip producers, or that were sort of weighing a week or two ago. On top of that, locally, of course, there was those better than expected inflation numbers a week ago. I wouldn't say they were fantastic, but they have continued to lead to a situation where the market expects the Reserve Bank to leave rates on hold next week. We've seen good levels for prices of things like copper and gold, and of course we produce those things in Australia. And I think there's also an element of catch-up locally. We rose 2.3% this week. So far this week, as you were just saying there, we're maybe just above 3%. So a pretty good couple of weeks. But part of that, I think, is a bit of a catch-up to the big underperformance we've seen in other markets compared to other markets around the world. And some investors might be thinking, well, those guys down under don't have chip producers or AI producers, but that may not necessarily be a bad thing, because other parts of that market could do okay. So consequently, we've had a good run. We are at record highs, pales into insignificance compared to what other markets have done for the year to date globally, but still a good result. If you look at it in isolation, I think we're up about 5-6% now year to date. Once you add the dividend yields, you're pushing up to around 9-10% in terms of total return terms, if the index stays where it is today.
And Shane, of course, given what we've seen on global markets, so it's all been about that AI trade. To an extent, you can see that as being a derivative move here too in copper. That has been an outperformer and has certainly driven the bigger miners.
It certainly has. The iron ore price, I think, has just been a bit range bound. A week or so ago, it had fallen, I think, to around $94 a tonne. I last saw it was around 95, 96. Down from its highs, but not dramatically so. But copper metals generally doing pretty well. I think copper's gone to a new cyclical high. That's a positive, and certainly a big support for our miners. Then we've still got high energy prices. Maybe that's helping the energy stocks. I mean, that whole situation in the Middle East is just messy. We talk about that week to week. It goes this way, then it goes that way. Who knows? We do know that Donald Trump is desperate to get a deal. His approval rating has collapsed again. And of course, we've got the midterms coming up. So he keeps saying that a deal is around the corner or the next few days. I think that's really a shorthand for him saying that he wants a deal, but not necessarily the case that the Iranians are willing to play ball.
Yeah, of course, time is running out for Donald Trump as we head towards those midterms in November. A couple of things counting against him, not the least of being no resolution in the Middle East. Shane, also inflation remaining a problem, potentially, as I mentioned there earlier, with the Fed having to hike later this year. We are going to get a key reader of that tonight with those non-farm payrolls report.
We certainly will. I suspect that non-farm payrolls remain on the back burner relative to the inflation numbers. But if we do see an upside surprise, I think the market consensus is for payrolls to rise something like 80, 90,000 or something like that. If we see an upside surprise on that, then it could further fuel those who are looking to potentially raise interest rates. And we have seen a lot of Fed speakers over the last week or so, including a few last night, and some of them are itching towards rate hikes. So I think it is critically important that the upcoming inflation numbers, which come out, so we've got payrolls tonight, and then on Tuesday next week, Wednesday morning our time, we find out what inflation in the US did in July. So it's critically important that you see good numbers there. If we see a bounce back in inflation on a monthly basis to say 0.3% on the core, that's excluding energy and food, then it's quite conceivable. That'll flow through to a bounce back in the monthly, what they call core PCE deflator inflation, which is the one the Fed targets. And that, of course, could further fuel the case that many Fed officials are already making that rates should be rising. If alternatively it settles down, then we can stay on hold for a little bit longer. But I'd say the risk of a hike in the US is quite high. The money markets are talking about something like 60% chance of a hike when they meet again in September.
Now, of course, we've got our own decision next week with the RBA. Shane, you're saying potentially they're likely to revise down their inflation forecast, hold rates, but you're saying what, we should not expect that to be the peak of the hiking cycle?
I don't think so. I think, as we saw last week, the inflation number for the June quarter had trim mean at 3.6%. The RBA was forecasting 3.8%. So the logic of that is that they probably have to revise down their near-term trim mean inflation forecast just to allow for that weaker June quarter outcome. But I don't think they're going to revise down the quarter-to-quarter profile going forward. And they will still see a slow return to target, which on trim mean doesn't really come on a decisive basis till we get to 2028, 18 months down the track, or almost 2 years away before we get to that point. So therefore, I think they'll probably say that inflation has come in a little bit lower than they expected, which is good. The unemployment is a little bit higher than they expected. The housing market has slowed a little bit more than they expected. This is relative to what their forecasts were in May. And therefore, they've got some breathing space to leave rates on hold again. But I think they will again characterise this, or Governor Bullock will again characterise this as something like wait and see. She'll stress that inflation remains too high, that the risks are still there, and that the Reserve Bank remains committed to doing whatever is necessary to get inflation back to target, including possibly raising interest rates again. Which is how she's virtually ended the last speech she did a couple of weeks or last week, and it's also how the previous statement ended back in June. So I think they'll retain that tightening bias, and I think they'll probably have to hike again later this year just to be confident that inflation will come back to target in a reasonable time frame. Like, I think the hurdle now for the RBA is a lot higher, for the simple reason that if you go back to 2014-15, we'd only had, 3 years of inflation above target. Now we're talking about 5 years out of 6, if you exclude 2024, 5 years out of 6 where inflation was above target. That, of course, then runs the risk that people won't take the target seriously anymore. So therefore, I think the Reserve Bank has to lean a bit more hawkish than they were, say, this time 2 years ago, or going into 2015, which I think they will do. But I think it also probably means they will have to hike again, but not this coming Tuesday.
Well, Shane, I look forward to unpacking that decision and the reasons why This time next week when we speak
Sounds
again.
good.
Enjoy your weekend. Thanks for joining us on AMP.
Thanks, Andrew. Take care.
All right, so let's wrap up this day and the week then, where we're likely to finish for the day. Looks as though we're going to be down around 0.1% on the S&P ASX 200 at 9,263 points. Bearing in mind, we hit a couple of new records this week. Those stocks on the move, it was the lithium miners today. They were the best performers. Liontown, PLS, both up more than 7%. The drag in the medical space, 4D Medical, that finished lower, as did ResMed after it reported earlier this morning. Well, tonight, as I said, it's all about those non-farm payrolls reports out of the US. And next week, of course, reporting season continues, including 3 out of the big 4 banks. We'll get across that and much more. Join us again on Monday. Thanks for watching and listening.